Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 24th, 2025, and we're diving into Carlisle's first quarter earnings report for 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Carlisle's performance, especially given the current economic climate and the challenges they've faced.
Revenue and profitability overview. Let's start with the top line. Carlisle reported a revenue of $1.1 billion for the first quarter of 2025, which is essentially flat compared to last year. However, their adjusted EPS came in at $3.61, beating the forecast of $3.53. John, can you elaborate on these figures?
Absolutely. While the revenue remained flat, the adjusted EPS of $3.61 indicates a strong performance, surpassing analyst expectations. This was achieved despite a challenging environment, with an operating margin of 16.8% and an adjusted EBITDA margin of 21.8%. These margins reflect Carlisle's ability to manage costs effectively and maintain profitability.
Strategic initiatives and shareholder returns. John, Carlisle has been active in returning value to shareholders. They repurchased 1.2 million shares for $400 million and increased their share repurchase target to $1 billion for 2025. How does this align with their strategic initiatives?
Carlisle's strategy is clearly focused on delivering superior shareholder returns. The increase in the share repurchase target underscores their confidence in generating strong free cash flow, which they expect to reach approximately $1 billion this year. Additionally, their recent acquisitions, which contributed $50 million in revenue this quarter, are expected to exceed synergy projections, further supporting their growth strategy.
Market conditions and future outlook. Despite the economic uncertainties, Carlisle seems optimistic about the future. They mentioned minimal impact from tariffs and reaffirmed their full-year outlook. What are your thoughts on their market conditions and future prospects?
Carlisle has positioned itself well by sourcing over 90% of its raw materials and sales in North America, which minimizes the impact of tariffs. They are projecting mid-single-digit revenue growth and approximately 50 basis points of adjusted EBITDA margin expansion for the year. The commercial roofing demand is expected to see a low single-digit increase, driven by re-roofing activities, which aligns with their positive outlook for the 2025 roofing season.
Segment performance and risks. Let's delve into the segment performance. Carlisle Construction Materials saw a 2% increase in revenue, while Weatherproofing Technologies experienced a 5% decline. What are the key factors affecting these segments?
The construction materials segment benefited from acquisitions and positive market demand despite weather-related challenges. However, Weatherproofing Technologies faced a decline due to lower new construction activity and retail sales, impacted by a drier-than-normal winter on the West Coast. Overall, the operating income declined by 18.5%, and free cash flow was negative at $30 million, highlighting the need for careful management of working capital and operational efficiencies.
Key takeaways. In summary, Carlisle has demonstrated resilience in a challenging environment, with strong earnings and strategic initiatives aimed at shareholder returns. Their focus on operational efficiencies and market leadership positions them well for future growth. Thank you, John, for your insights.
Thank you for having me. It's been a pleasure discussing Carlisle's performance and prospects.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Carlisle's performance in the comments below. Until next time.